Hey guys, hope you're doing well. Today we're going to learn how to do futures trading. And before we jump into the futures trading arena, I want to talk about how actually futures trading works. And although it sounds complicated, but once you understand the logic, it's actually pretty simple. So you're basically betting on where the price of something is going. Let's say here we're talking about Bitcoin. So we bet on the price and we bet on the future of the price, whether it's going up or down. So in this video, I will walk you through what futures actually are, how trading them works step by step, and then how three biggest lessons I think that every trader eventually learns. So let's jump into it. So the first part is what are futures. So a future contract is an agreement between two people. One agrees to buy, the other agrees to sell a specific set of asset at a specific price on a future date. For example, let's take Bitcoin here, and if the Bitcoin is $60,000 and you believe it's going to go 65,000, you can buy a Bitcoin future contract, and if the price rises to 65K, you make profit. If it falls, you lose. So that's very simple. You predict the future, and the difference from normal trading is that you don't actually own the asset. You are trading the contract's value. So let's jump to the second part where how futures trading works. So this is where you a trader should know how the things are working behind the scene. So when you trade futures, you don't pay the full price. That sounds really easy when you go and trade, but then let's discuss what happens. So you only put a small portion called margin, and a security deposit. So it's like a security deposit. That's what gives futures their leverage. So say that you have $100 and then the exchange gives you a 10x leverage. So you control $1,000 position. So if the price moves 5%, you make 50% profit on your money. But if the price moves down 5%, you lose 50%. And so it's powerful but also dangerous. So part three is very important. How to place a futures trade. So we can talk about the crypto community and how we choose a market. So we chose a market for crypto, let's say Bitcoin, and now decide a direction. So you've been trading spot, you've been learning, oh, I'm gonna buy low, sell high. So if you know how to do that, so go into futures. So decide the market, go long if you think the price will rise, go short if it's gonna fall. Then set your leverage. So that's very important. I would say anybody who's starting leverage trading, futures trading, make sure don't increase your leverage too much. Make sure your liquidation price, the price where your account or you lose money and the trade stops should be always far away. So lower leverage means you're less taking less risk. But the higher the leverage, the higher the risk. All right. Once you select your leverage, place your stop loss. Oh, so stop loss is one of a blessing um, in futures trading that limits your loss if the market goes against you. You never know. Crypto is extremely volatile, and so always place a stop loss and accept the stop loss. That will really help you. And close or let it settle. So that's when you choose manually anytime to close if you're not putting stop loss, or if you even if you are putting stop loss and you're in profit, either do it manually or just limit order. So the order would be placed on limit and it will automatically close your trade and you will book your order profit. But in any case you're in profit, I would always recommend you to put a trading stop loss. Means like once you're in profit, drag your stop loss a bit higher, and then even if the market goes against you overnight, you will still be in profit because you put your stop loss in a profit position, um, since you were already in profit. So it's simple to execute but harder to master because managing emotions and risk is 90% of the game. Okay, part three. Um, Lessons most people learn the hard way, which I also learned the hard way. So Here are some things that I think I wish someone told me early. So number one is leverage is a double-edged sword. Um, 10x leverage means 10x move against your wife and you wipes your account. So leverage is risky. Always keep it low. The more you increase your leverage, the higher chances that you're gonna get liquidated and you will be out of the market. And then don't trade every move. So sometimes you think that I'm gonna trade every move. That's not the right way to trade in futures. Wait for the structure, volume, and confirmation. However you do a trade, whatever indicators you use, either you are based on news, make sure to wait and do trades. Number three is protect your margin. You need to protect it because once you lose it, you're out of the game, and then always use stop losses and avoid all in trades. So always keep some money aside. Don't just go all in. Don't put all the eggs in one basket. So I would give you a bonus tip is like always journal your trades. The real skill is in futures trading, isn't predicting, it's managing yourself. So that's one of the things that are very important. Um, so let's just take some crypto trade, and I'll show you how I do my crypto trades, and I will show you my screen, and will show you how I'm doing my trades, and also show you where I put my stop loss and I had losses. So you can see this is the Bitget exchange, and right now we are seeing Bitcoin. It already made another all-time high, and we so right now, if I go to BNB, so this is my BNB position right now, and you can see that I opened my trade at 13.15 dollars position. Right now is 13.09. This is my trade. I have, since I took it from almost the top, so right now the market is already in a condition where everybody's greedy. This is the right time to go short on market, but I will show you how I try to keep myself. So my position is cross 6x, which means if the price of BNB goes to $2020, that is the only way my account will be liquidated. And so now I'm watching trades, so I haven't put any stop loss because I'll be watching it, and I'll see if I want to stop the trade, and I'll just call it a day. So this is where my account will liquidate. I think BNB is already gone too high, so we'll see how the market reacts. So very simple way to do it. Let's go to Solana, and this is a cross position. Initially, when you start doing crypto trades or in futures trading, just do isolated. And let's say if we do long here, we for $50. If you have 4x leverage for long, and you can see estimated liquidation price. So if I'm going long here, means that I'm predicting Solana will go up. My liquidation price will be 166. That's like way too far. It's here. So this is the point where I'm gonna get liquidated. So that's the I would say the benefit of trading with low leverages. So and if you go short here and you think it's gonna go down even further, then 274 is where your account you will get liquidated. This isolated trade means you're not gonna get wiped out from your whole account. You only $50 will be yours. So this is how you actually should choose trading crypto in futures. And let's say I would order details or position history. I'll go to position history, and okay, so you can see I did some trades. So I had some +4 +7%. This was closed and this was a stop loss where I had -$20. This was +$29, and you can see that +$18, -30, +4, +6, +15, 4, 5, 4. So it's just because of low leverages and easy trades, and you can slowly build your portfolio. Um, so this is how you actually do futures trading. In the next video, we'll talk about some coins that are actually very early, even if you want to do it in spot or futures. But right now, if you plan to do futures trading, keep the important points that I shared with you, and make sure that you do it responsibly and keep emotions out of the game, because at the end of the day, the market reacts in its own way. So be ready to take stop loss, and save yourself. So we'll meet you in the next video. Till then, bye.